Let me guess, someone have sent you a quotation for a whole life insurance, or maybe you have heard the way it has very good benefits, like the sum assured, the protection is over and above what you have been having in the market. And actually, you have been wondering, is this something that actually I need to get? And maybe you are confused, what is this whole life insurance? Are you even confused? Is it worth it? Is it going to help me in my financial freedom journey? Don't worry, because today in this video, we're going to discuss all about whole life insurance, what it actually is, and how it can be able to help you in your financial freedom journey. Hi guys, welcome again to another episode of Financial Literacy. My name is Jane Dishu and I'm a financial advisor. So the first thing is, what is whole life insurance? So whole life insurance, as the word suggests, is a type of life insurance where you pay an amount of money to the insurance company, either monthly, quarterly, yearly, or for the agreed period of time, and then you get to be covered for the whole of your life. So your next of kin get to be paid an amount of money in case of your demise at any point. So this can be after you have paid your premiums, that can be 10 years, 15 years, or 20 years. And even if you pass on when you're 100 years, 120 years, this insurance is going to pay you. It's kind of like a cool kind of an insurance, because the moment you start paying, you're able to get to the term of that cover, you're going to enjoy this even if you're not going to be contributing. The other thing I want us to look at is some of the features of a whole life insurance. So one of the feature is it's a lifetime policy. So this means that it is going to pay your next of kin, not for a certain period of time, but when the death happens. So it doesn't have like a term of when you get to 70 or 50 or 10 years from now. It actually covers you until that time. So even if you live to 100 to 120 to 200 years, this policy is going to pay your next of kin. The second thing, it's actually going to give tax-free benefits to your next of kin. So this amount of money that is going to be paid to your next of kin is tax-free, so it's not going to be taxable. So if you're actually looking at another way of giving an inheritance to your next of kin without being subjected to tax, this cover is for you. The third thing is the cash value. So some of the whole life policies actually give you a cash value. This means part of the money goes to a savings and investment, and this in return actually guarantee you to get to borrow or to get a loan after maybe 36 months of saving. And this is how you can actually be able to withdraw some amount of money. But now, a disclaimer: if you actually get to borrow this amount of money, just know if you don't pay, there's an interest on it. And also know that if actually the time lapses and you have not paid for this loan, it's actually to affect the amount of money that your next of kin is supposed to get at the end of the time. The last feature is predictable premiums. So you already know that if I'm paying 3,000 per month for the next maybe 10 years or 20 years, you already know that the life cover that you're going to get for that period of the cover that you're going to enjoy is maybe 5 million or maybe 2 million, depending with the amount of money. So there's no way the premiums are escalated at no particular point. So this also beats the inflation factor, because you already know if I'm planning for an inheritance of 100 million, you know that you're going to pay that amount of money for the rest of the time, and there's no escalations. I know at this particular point you're asking yourself, is it actually worth it? And it's actually worth it if you are a person who is looking to leave an inheritance, or if you are a person who is looking to leave something for your generations. The second thing, if you are a person who have already maxed your savings and investments, or maybe you have gotten to a point where you have already done whatever you could be able to do in your savings and investment portfolio, this is actually for you. And the third thing, if you're trying to build a legacy that is actually tax-free, this is also for you, because this estate is going to give you a tax-free benefit, and it's actually worth it for your case. And the last thing is if you are looking for a lifetime or a long-term protection. So this is where you already know that I'm looking for something that if I enter at this particular age, even if it happens at this, or the demise happen maybe when you're 100, 120, or whatever age it's going to happen, you are actually looking for it, because this is quite different from what you're used to in the market with a term insurance. So this is going to actually cover you until that time happen. So the other thing is, it might not be worth it if, one, you're a person who is actually doesn't have next of kin or people who are actively depending on them. The second thing, if you're a person who is actually starting in your savings and investment journey, if you need to put all your money in creating wealth, at this particular point, you're going to look at investments that are going to give you more money. Also, for a person who is actually on budget, or who doesn't have maybe a lot of money to spare for only a pure life insurance, this might not work for you, because it will require you to have also the commitment. Let me tell you, commitment is actually something that is required in this policy. And this takes me to the next thing that I want us to discuss. What are the fine prints? What are these small notes that people are not telling us about whole life insurance? So one of the things about whole life insurance, or one of the disadvantages of a whole life insurance, if maybe you are not able to pay the premium for the stipulated amount of time, you are going to lose the cover after 3 months. So if maybe you had agreed that I'm going to pay my premiums or I'm going to give this contribution for the next 10 years, and let's say after 3 years you're not able to actually continue paying your premiums, let me tell you, you are losing this cover. And in case you want to come back to continue with this cover, you have to pay all the amount of money you had skipped or all the months that you have skipped. So there's no in between. There's no like they can waive this amount of money and extend the period. There's nothing like that. The other thing that you also need to know is for you to enjoy this lifelong cover that is quite exciting, you need to actually get to the end of that policy. So if the policy is 10 years or 20 years or maybe 15 years, that's what you agreed with the insurance company to pay the premium, you should not stop paying this amount of money. There is no kind of a paid up. In the other term policies, you can actually contribute to actually 3 years and then you stop and then continue, maybe let your money invest and compound for you and get your money after the period, and still that time you're enjoying maybe a reduced cover. For this one, there is nothing like that. You have to pay the money. You have to pay to the end of the term. So if you stop in between, there is no cover for you. So that is why commitment is something that is actually very important in this whole life policy, because if you are not in a position where you have an income that is actually continuous, or if you are not in a position where you know that I'm certain this amount of money is actually coming maybe from my passive income, or it's coming from maybe somewhere that I know that it's consistent, it might be somewhere you actually end up losing your money. And at some particular point, I tell a client, if maybe you are not able to do that, let us first deal with the term insurance, and then whole life insurance can come when we have a stable income, or can come when you already have existing investments that we can use to actually pay for the premiums for a whole life insurance. I know at this particular point you're saying, Jane, tell us, who are these people you're saying who can be able to actually get this whole life insurance? So the first category of people, if you're a parent or you have people who actively depend on your income, this is something for you because they're going to get an inheritance from the whole life insurance. The second thing, if you're a business person and actually you're looking for protection, this is actually for you. The third thing, if maybe you're business partners or maybe you own a company, you're a director or something close to that, you can be able to get a whole life insurance in form of a key man insurance. So at this particular point, your business gets to be covered in case you are not there as a key person in that company. The organization is compensated by an insurance company. The third category, high income earners. These are people who actually have already created their wealth and they have maybe some stable source of income. This is something for you, and maybe they are looking at maybe something that is tax efficient. This is something that you can actually be able to consider. Last category of people, these are people who have already accumulated wealth or who have an investment portfolio and they're trying to protect their wealth. Whole life insurance is actually for you. So at this particular point, I know you have learned something about whole life insurance, and in case you would want maybe some quotation or a way to be guided on choosing the best life insurance for you, make sure to follow me on my Instagram page and book your free consultation so that we are able to choose the right insurance cover for yourself. And until next time, thank you.